A king once lost his entire kingdom in a single day. Every coin, every soldier's wage, every grain of wheat in the royal storehouse, gone before sunset. All because he forgot one rule so simple that even a farmer's child knows it by heart. Welcome to Analogy Studio. Today, the wisdom of spreading your bets, told through two kings, one earthquake, and a lesson that separates the wealthy from the wiped out. Two kings ruled neighboring lands separated by a single river. King Aldric was bold, loud, the kind of ruler who slammed his fist on the table and made decisions before dessert arrived. He'd discovered a gold mine in the eastern hills, the richest vein anyone had seen in a generation. So he did what felt obvious. He poured everything into it, every coin from the treasury, every worker he could hire. He shut down the coastal trade routes, pulled funding from the farms, even dismissed old Harland, the royal shipbuilder who'd served 3 kings before him. "Why split it up?" Aldric told his advisors. "This mine produces more in a month than those dusty farms earn in a year." His advisors nodded. What else could they do? King Brennan, across the river, was quieter. He'd found a gold mine too. Not quite as rich, but solid. He invested in it. But he also kept his farmland running under Marta, a weathered grain merchant who could predict a drought by the way sparrows flew. He kept 3 trade ships sailing under Captain Oren, a man who knew every port from the northern straits to the southern coast. And he funded a row of shops in the capital, a tanner, a dyer, a candle maker, small earners, but steady ones. "Why not go bigger on the mine, Your Grace? Aldric is pulling twice the gold we are." Brennan just shrugged. "Twice the gold from one hole in the ground. What happens if the ground swallows it back?" Then the earthquake came. It hit at dawn, a deep, rolling tremor that cracked the eastern hills wide open. Aldric's mine didn't just collapse, it caved in. Shafts flooded. Tunnels folded like paper. 300 workers scrambled out with nothing. The richest vein in a generation was now a tomb of mud and broken timber. Aldric stood at the edge of the wreckage, pale. No mine meant no gold. No gold meant no wages for soldiers. No wages meant no army. No army meant no kingdom. The collapse took 11 seconds. The consequences took everything. Across the river, Brennan's mine collapsed too. The same earthquake, the same destruction. He lost it, all of it, the shafts, the gold, the equipment. But Marta's farm still stretched green across the valley, untouched. Captain Oren's ships were already at sea, carrying spices worth 400 gold pieces. The tanner, the dyer, the candle maker. They opened their shops that morning like any other Tuesday. Brennan lost a mine. Aldric lost a kingdom. One hole in the ground. That's all it takes to ruin a man who bets everything on one hole in the ground. This is diversification, the practice of spreading your money across different types of investments so that no single failure can wipe you out. You deposit money in a savings account. Like Brennan's steady shops, you invest in stocks, like his gold mine, higher reward, but higher risk. You buy bonds or real estate, like Marta's farmland, slow but resilient. You might even invest internationally, like Captain Oren's trade ships sailing to foreign ports. The principle behind it is called modern portfolio theory, and the math is straightforward. A portfolio split across stocks, bonds, and real estate has historically delivered similar returns to an all-stock portfolio, but with 30 to 40% less volatility. You're not giving up growth. You're giving up the nightmare scenario. You don't put all your savings in one company's stock. You don't keep all your wealth in one asset class. You don't bet your retirement on a single country's economy, because earthquakes, recessions, crashes, collapses don't send warnings. Concentration builds wealth. Diversification protects it. Smart investors do both, and they never confuse the order. First, it explains why even billionaires don't hold 100% of their wealth in the company they founded. Because one bad quarter can erase decades. Second, it's why your retirement fund holds hundreds of stocks instead of 5. Spreading the bet means no single bankruptcy destroys your future. Third, it's why financial crashes hurt some people and destroy others. The difference is almost always how concentrated their bets were. Understanding this one truth changes how you build, hold, and protect wealth forever. Subscribe to build wealth that lasts.